This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to give an update on the stock market. Lots of activity taking place, and we've gotten some shifts that I think are a little bit more meaningful than what we've seen in quite a while. So I want to get into the charts. I'm going to do that. I want to talk about a couple of different indices. One thing I wanted to mention is that I'm not going to show the volatility. The volatility is clearly on the upswing. I mean, I'm just going to pull up the daily chart, look at the size of these bars, look at how they're growing relative to where they were back in here. And we can do the same thing on the weekly chart. It's definitely a shift in the volatility going up. And as I've said on this channel for months now, when volatility goes up, the risk levels also go up. The other thing I wanted to mention is the number of bears versus the number of bulls. So the bull-bear spread by investors' intelligence has dropped. The number of bulls has actually really kind of dropped off here over the last few weeks, and we're down to 15% more bulls than bears. Now, if we get into an environment where the market really sells off and we get some kind of violent decline, a lot of times you'll have more bears than bulls, and we get a real opportunity, a real buying opportunity. That's what we're on the lookout for, where you can be a little bit more on the aggressive side rather than waiting for the market to stabilize or turn around or going down to smaller time frames. You could just kind of take advantage of a big drop in the market. If it comes into some key support and we've got a lot of people bearish, we want to be on the lookout to learn or to be on the lookout to take advantage of that. So that's really what I'm trying to find. But I want to start with a monthly, mainly because what I've been talking about here for a few months is we got away. So here's the 18-month line. And we moved up above that right after the market crashed in 2020. We got back above it pretty quickly. And we haven't touched this line now. It's almost 2 years. But we weren't really expecting a correction back to this line until we switched over into 2022. Just because when you're in a trend year to the upside, you don't usually sell off near the end of the year, even though you were getting overbought. So we're in a position now where we're starting a new year. It's been a long time since we've been back to this 18 months. So the probabilities are that we're going to work back to this line. Now, maybe we're going to come down really hard to the line really quick. Maybe this is just going to find support and consolidate while this line moves up, or possibly it's going to come down and it's going to break the line. And any of those are probabilities. And that's why we have to go down to the smaller time frames to sort of decipher. We also want to look at the sentiment. We want to look at the volatility. All these factors are going to help us. But really, over the last few months, I've been sort of telling people to take your foot off the gas and be a little bit more on the selective end of the spectrum when you're looking at buying, just because of the position the market has been. Now, look at what's happened to the daily chart, the weekly chart. So we had this poor ADX action, poor MACD action as a backdrop going into the end of the year. Pretty much for the last few months of the year, the market was going up, but it didn't have a very good look to the momentum conditions. What I've been waiting for is a break of this 18-week line, and it looks like we're finally doing that pretty definitively this week. Still 1 day left for the week, so it's possible we'll bounce off this 40 and get a move back up, and maybe this won't look so bad at the end of the week. But just looking at how this has played out, looking at how the momentum conditions are going into this, I'm more inclined to believe there's probably a little bit more downside before this makes any kind of a real reversal. So I would think the earliest spot would be this prior low right around I think it's right around this 429. Let's zero in on that. The low was 426. So I think that's where this is kind of like the minimum target is what I'd be expecting for this to come down and test that prior low. That happens to be not that far away from this 425 breakout level. So that's kind of the spot that I'm looking at. Now, what I'm going to do in order to determine whether these levels are going to hold or not is not, so I'm not going to sit back and say, okay, I know this is where it turned before, so I'm going to have an order waiting right here to buy. I just don't do that. What I'm going to do is I'm going to see what kind of momentum conditions I have on the daily chart and the hourly chart and see if the probabilities are that we're going to come down to this level and break it, or we're going to come down to this level and maybe undercut it and in reverse. Any one of these things can happen. Right now, we've got red DI showing the sellers are strengthening. The volume's been pretty good, so the down move is still intact. We are down in this prior low, and I really didn't expect this to just break through there without some kind of a little rally in between. And I would not be surprised based on how violent the selling was at the end of the day. Look at this hourly chart. You see how they just puked it up. It just was really got ugly by the end of the day. And look at the size of the volume in the last hour. That's a pretty good maybe climax for the short term. Now, keep in mind, we've got room before we get to the 18-month line. So there is some more downside risk in this market, but we might have reached a short-term level of getting a little overdone on the downside. So we want to put all these things together, right? We're still working our way down on the bigger time frame, but in the process of doing that, we've gotten close to the 40-week, we've gotten oversold and maybe undercutting this low, and we're showing some somewhat of climatic action here. Now, if it's really ugly, maybe it even gaps down in the morning, gaps down Friday morning and then turns back up, or it might not. It might do what it did today, which is kind of try and gap up. And then it's very possible we'll get another decline into maybe a more significant low into early next week. So what I want you to do is keep an eye out for the ADX on the hourly time frame, which right now is still in a pretty strong position. And I also want to see what happens here. If we get a reversal of this pattern in the short term and red DI holds above 25 during that period, then we're going to get another leg to the downside, which I think is the highest probability. But we just got to keep open, don't have any hard and fast rules, know where your key levels are in terms of where support is coming in. And I just wouldn't have an order waiting down here assuming that you know how this is going to play out, because the likelihood is that this is probably going to get a lot worse before it gets better. But in the short term, we could get a little bit of a rally. Let's go to the Qs, because this is really the leader. This is really what's pulling down the market in a lot of ways. Look at the weekly chart on this. So this broke 2 weeks ago. Then last week couldn't recover and get it back above. And now we're following through and not only breaking the 18, but we're breaking the 40. And now this 18-week line has rolled over. So that's the first time that's happened in this whole process. First time we've been below the 40-week through this whole process. Now, this had the same issues with respect to the momentum conditions. This has had a little bit more signs of distribution in place when you look at the volume. The violent selling, pretty aggressive. We've got 337 as the 18-month line, and I do think ultimately that's where this wants to go. Now, is it going to get worse than that? I mean, it's possible, but right now I'd be inclined to think that sometime over the next few months we're going to try and come down and test this key line. I want to jump and I want to show you something that I think is pretty important, because the semiconductor stocks, so this is Applied Materials, but the semiconductors, generally speaking, have held up pretty well here. But look at what's happened just recently to this stock. Look at the last 3 days for this thing. It actually tried to break out. So first let's look at the day before. Look at this big green bar, tries to break out, sucks some people in thinking, oh, well, this is actually getting ready to break out to the upside. But we can see based on the DI line and the ADX, that was not a strong breakout. Green DI couldn't even get back above 25 by that point. And then we had a massive reversal, took out the low of the green bar, and have just been straight down ever since. So pretty ugly in the way this has played out. And this has been a real leader. The fact that the semis are starting to give this up could mean that we could be going into some point of a quick markdown phase, and maybe some of these stocks will work their way back down and work off the overbought condition that's been created really over the last few years, where we haven't touched the 18-month in quite a while. So that's the update for the week. Go ahead and post any questions or comments, and we'll see you next time.